reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain.
What's up, everyone? It's Guy here, Minority Thinker. Welcome to my channel. Hope you're doing well. Today is Saturday, August 27, 2022. This is a market update. That was the Fed. Jerome Powell made a speech that literally crashed the market. Now, before I go on, I'm talking about the updates on the market, crypto, real estate. If you haven't already liked and subscribed to my channel, please do so. If you like this content, please do, and let's subscribe to my channel. And also, don't forget to hit that notification button so that you can get notified once I drop new videos into your notifications. All right, guys, with that said and done, let's get to the video. So after that speech that Jerome Powell did, basically what I interpret from the speech is that there's no pivot, at least for the time being, not anytime soon. They're basically engineering a market crash, economy slow down. The funny thing is he didn't even mention any types of or talk about soft landing. Remember how I was talking about soft landing, the previous talk? This time around, hawkish, meaning basically they're tighten, squeezing it. So that basically signaled to the market that, and this is the result here, 3% in Dow Jones, 3.4% S&P, Nasdaq's almost 4%, Russell's 3.3%. So the whole market is completely tanked. Okay, and like I mentioned from my previous video, let's go to my trading views here. So a lot of folks out there, a lot of talking heads, a lot of media heads, was trying to push for that bull. Oh, this is the uptrend. This bounce here that I mentioned previous is just a bear bounce, dead cat bounce, whatever, my bear rally, whatever might be, it is. It is what it is, and people basically talk it into like this is gonna basically turn into an upward trend. Once it have a higher high than this first bounce, and basically I believe they're talking about how it's basically going on a bull run. And that's nothing more, in my opinion, from my previous videos telling you guys to be careful. Don't buy it on the dip. Don't buy it on the dip. And when the narrative changed toward like bullish, don't chase it into a bullish. And guess what happened? The bull trap just happened at that, at the like I mentioned, 200-day average, and basically it tested that resistance completely. Rejected it, came down, and then basically went on a slide here. Okay, so let's do a measure here. That is 6%. Okay, since the rejections of that 200 moving average, is there a possibility that it could test it again and go back into the next level of resistance? Maybe, but I think that probability is very, very low, especially right after that speech by Jerome Powell, the hawkish speech, that he's going to tighten even more and raising the rate, could potentially unexpected raising that rate. So this is what's going to happen here. Leg down, two legs up. This is a second legs up. It's going to be third legs down, or a second legs down. So if you do a measure move, it's going to break that low of June 16, goes down to the next level, 34.85. So the probability of that, expecting that too as well. If it doesn't hit, that's fine. But that is, and it's already 13%, 14%. Okay, and I believe that's the best case scenario of that right there. This is just I measured that to the second. They're even a bigger is this right here. Okay, if you do that measurement out, at 25%. So previously I anticipate it goes down to here, make a couple bounce, and then it goes down to the third leg down. But now it's gonna be in between this here bounce, and then it's gonna go down further for the final leg down. Okay, that's the market's always, not always, but tend to do that. One leg down, two legs up, second leg down, a couple more legs up, and then third and final leg down, and then that's when they make a recovery. So that's how the market typically behave. All right, guys. So let's take a look at crypto here, and it's not doing any better. Okay, looks like real time right now it's at 19.9, so it's been under 20,000 the past several hours now. And if you look at this, obviously I mentioned previously a drop under this funnel here, a little bear flag funnel here. It dropped underneath there. It's going to a smaller bear flag, so it's going to do the same thing like what it's doing here. It's going to have a little bit of a bear flag. It's going to drop down to the next level, bear flag down here. At some point it's going to do, I believe that September surprise Jerome Powell, surprise jack of interest rate, potentially 50 basis point or 75 basis point. It's going to drop even further down. So it's going to drop, I believe, similar to this measure move right here. I mean, you look, there's a breakout of the funnel all the way to this level here. You do that, guys, it's going to test this level that I'm forecasting. It's going to hit 9,700. Okay, so for me, would not surprise me that's going to happen, how it's going to play out. Okay, so as you can see here, look at all these down, stabilize, bear flag down, bear flag down, bear flag down, breakthrough, has these little mini bear flag, and down. Okay, that's gonna be the pattern there. Hysteria and such can kicked in, end of the world types of thinking can go make it all the way down to about here, in my opinion, and then eventually it will make its way up. Obviously, just refresh, guys, I am a long-term holder of Bitcoin, okay, and some of the crypto as well, AVAX, for example. It's my long-term hold. Again, none of this financial advice. All my videos for purpose of education and entertainment only. So anything DYOR, do your own research. But when time comes like this, volatility, people were spewing out different things, you gotta look at the chart, guys. You know, I mean, chart don't lie. Okay, you can interpret it your own way, whatever you want to interpret it, but charts don't lie. So when, say, when the market that's double top like this and people are talking massively about this here, oh, it's going to shoot to 100,000. Remember those 100,000 Bitcoin and such with even double top? You know what I mean? When it's in this, making this big run right here, super cycle run, the talk, then it's fine. But when it's up here, whew, look out. So that's what happened. It crashes. Okay. And trust me, I was one of those getting hyped into it because I'm such a long bull, and I bought into the idea. I bought into the long-term gold, but I didn't. I got caught. Listen to talking heads. Okay, which is never gonna happen again. Fool me once, shame on you. Fool me twice, shame on me. So I'm not gonna get fooled again with this hysteria. Okay. So again, guys, my talk is that try not to listen to talking head. So we have double top, and anything simple as this. When it's peak, take profit, guys. Take profit. When it's low down here, don't sell, hold. Simple as that. I know sometimes just forget about it. Just, when you're down, when you bought up around here, you drop all the way down, don't be in despair. Just hold, because this tooth will pass. It will eventually go back up. It just time, when and time, okay? And you're tied in, so don't sell. Now, if you like me bought it at around, I believe I bought around here, and I see the signs that it's going to go down, I sold for a loss. But now with that money that I sold, I am waiting for it to go down here and buy it here, and it's going to go up, and I believe in the long term it's going to go back up. So I am waiting and cost average it once it hit a certain frame, okay? Certain buying frame that's under 19,000 for me. Updates on real estate. This is the headline a couple of days ago. Home prices fell for the first time in 3 years last month, and it was the biggest decline since 2011. Home prices declined 0.77% from June to July, the first month of decline in nearly 3 years, according to Black Knight, the mortgage software data analytics firm. While the drops may seem small, it is the largest single month decline in prices since January 2011. It is also the second worst July performance dating back to 1991. Further price corrections are likely on the horizon as we move into what are typical, more neutral seasons, months of the housing. So further price correction are likely. Basically, these are little cities here. Obviously, Seattle, looks like 7.7 prices down. San Francisco, these are a big market. So there you have it, guys. Prices are starting to make the decline. And if you think about this, all right, guys, a lot of folks, like I mentioned before, my previous videos, I'm a real estate broker, real estate agent. Obviously, I don't work for just commissions, meaning that I don't live on a commissions like a lot of real estate agents do. Have to work commissions, so they do whatever they can, not to talk down on them as well. I mean, that's bread and butter. That's their living wages. So they have to sweet talk or sugarcoat to get folks into the house or buying the house. So I mean, that's in their best interest to do so. I mean, I won't blame them for that. I'm just saying is that a lot of time, you as an agent, you do have a judiciary duty to your client to tell them, at least for the good one, is tell them, hey, market forecast, or what do you think of the market in the next? I mean, clients ask me this all the time. What do you think of the market in the next couple years or whatever the outlook? I would tell them, what my research, what I've been looking is that it's, just, and tell them the truth. And if they're if they're willing to buy the house, and if it's say if their market downturn, of course we can't predict the future, but there are signs and indication that lead to not a rosy future. Not everything is going up and up and up like most talking heads. Everything, you buy a house, everything is going to go up, up, up. No, it's not. There are cycles and I believe me, some of the $1 million agent, some of the $1 million investors still think that way. They don't think that there's going to be a market cycle. Believe me, they're saying, "Oh, you buying a house is the greatest investment." Yes, buying a house is the greatest investment, but where are you buying in your cycle? Now, if you're buying in 2006, 2007, when it's at peak, and then it crashed 2008, now that is not a great investment. And some still pitch back then, which I've lived through, and I've doing my real estate research back in 2006, 7, 8, 9, 10, and go through the whole cycle. And I bought my first home in 2010, which is the lowest market, and I was able to keep buy and sell it up and upgrade it into a better investment. So it's huge where you buy it in the wave of the cycle. Okay, you don't want to buy at the peak. And a lot of folks out there also talking about price doesn't matter. No, price dictates everything. Price doesn't matter. Price doesn't matter. It's the contracts. It's the whatever low interest rate doesn't matter. No, it's not. Price matters most. Talk to Warren Buffett, which is the value investor. He looked for price. He looked for discounts. Okay, that's when he buy, and he make a lot of purchase during a downturn. Yes, he's still making purchases here and there, doing a normal cycle and up cycle, but he make purchases during a downturn the most. Okay, so prices is very important. You don't want to buy at a high market. If you can wait. You can't wait, and you have to buy like a real estate. Buy with a proactive mindset. That say that if the market pull back, your mortgage, the value is going to be less than that of what you owe. Would you still stick around, or you have any tools, any hacks that you can do to offset that? Like you can rent out an extra room to hack it. You have a basement, you can rent out family, stuff like that to offset the mortgage. Let's say if you go on unemployment, can you still able to do that by renting out, part of your room, part of your basement, part of your garage, whatever might be the case, your yard, do all kind of hacks, okay? That's how I did it when I bought my first property. Even when I bought it at the low, I still did that as well. So there's different ways you can do to manage that risk of, say, unemployment, or manage risk of say, your job pullback or something like that, okay? But buying at a peak versus buying at a low, yes, you buy at the high, you have to wait through the next cycle, okay, to basically accelerate your position. Now, if you buy a low, exponentially accelerate your position even more so, okay? Low mortgage rate, basically lower mortgage payment on the lower home, because rates, and then with compound with appreciation. So if you buy at a high at the peak, you're gonna risk of depreciates value. So you work against you. You buy a low, you have appreciation, and low mortgage works for you. You buy at the peak, then it will take you longer. So here's what I'm talking about here. And again, some folks still talking about prices doesn't drop very quickly. I mean, this is one of the quickest turnaround I have ever seen. Okay, you going from May a few months ago, I would say 3 months ago, multiple offers. You put on the one day, it's like 20, 30 offers, sometimes 50, 100, and here in Seattle, 200, 300,000 over asking. That's insane. Okay, you're going from that until last month, which is July, to literally zero offer, and now folks are lowering the price. So within the span of 2 to 3 months, it going complete 180 and under. What I mean by under is that from going 100,000 over to like no bidder, and then reduction of 50 to 60 k under. So as quick as the rate of change is, a fastest I've seen. So be wary of that. And in June and July, supposed to be one of the hottest seasonal in real estate, and yet you get a slowdown, because if you look at the seasonal in housing market, okay, see, prices is where you price the most. June or July. So seasonally off, June and July mark the highest prices you can fetch, as well as the number of sales. Okay, here's June, July, and the lowest January, February, the lowest. So we're at the peak June and July of supposedly highest price and highest amount of sales seasonally wise, and you have prices fell. So that tells you is that the market came to complete halt, even in the hottest months, seasonally months. Okay, if someone came out and said, yeah, summer people are out and about, go vacation, so they don't buy houses, that's a bunch of baloney. Okay, June, July is the peak real estate season. Okay, and after September to January is the lowest. If you look on here, see, hey, it declined huge. This look is drop here. Just imagine the drop that's going to be from August to January. So that, my friend, it's going to be the biggest drop in real estate. So January, if you were to buy January toward the end next year, would be December and January would be a good time to purchase. If you wait all this long, it will be a good time. So let's take a look at one more number here. Monthly supply of new homes in the United States. The inventory, low inventory. Remember early in 2021, low inventory. There's not enough homes that are being built. It's going from like no homes being built, 3.3 months in August of last year, into almost a glut of 10.9, almost 11 months in July inventory. All right, guys. So, and the indication is that every time when you have more than 7 months of inventory, you are in a recession. 7 months, 69, 10 months, 73, 11 months, 80, peak 11.3 inventory. So again, obviously with the exception of 2021, but I can see the lead up into the 2008. The inventory is actually more now than is back in 2008, before the recession in 2008, and the sharp increase even more so. So again, that's an indication that it's just the beginning, guys. They have not even announced a recession, but yet inventories are almost at 11 months of supply. So how is it going from a no supply 3 months to lowest almost of all time to almost the highest of 50 plus year? Okay, guys, so that is a shocking statistic, and this is just the beginning, in my opinion, and based on the charts that I'm seeing. So more home, more gluts is going to come out. As far as seller, guys, if you're thinking about still thinking about selling, do sell. But market, and it depends on how quick you want to sell. Do market so that it sell quicker than the glut that is going to come here with the new homes are backing up. The inventory is backing up fast. I mean, you're going from doubled inventory in 6 months. Okay? And I can see this shoot past. I can see this number matching that of 2009, if not even higher in 2009. Okay? All right, guys. That's it. I'm out. Cheers.